Call to order of a work session of the Goodyear City Council, Wednesday, March 10, 2010. All items listed are for discussion only. No action can or will be taken, and all of the members of council are in attendance. We have one item on our agenda, and that's relates to the budget, and it's to be briefed by Larry Lang. I should state that this was suggested that be presented to us by Mr. Howard Broadbeck, who's a member of the Budget Committee. And so we're looking forward to hearing this presentation, Larry. And then why don't we just make it definitely an open discussion. You don't need to address the mayor. If you have a question, you just ask the question. If you have a point you want to make the point. Okay?
Okay.
Mr. Mayor, could you speak up? It's hard to hear in the back.
And they're not working?
My mic's on.
I think he needs to turn them up.
You hear mine?
And can you hear me fine back?
Yes.
Thank you, Mayor. As you indicated, the request from Howard Broadbeck from the Citizens Budget Committee asked that you see the presentation I gave them. Well, I'll be honest with you right up front that it was based on a flow of numbers and so forth, so it will not be identical because I didn't write anything down specifically, but I did, obviously, I'm going to follow the same format. And the format that we used that night, much as you had indicated, allowed for questions as I'm going. So please feel free to ask questions as I'm going. If I'm going to cover something in a little bit, I'll let you know and we'll move to that. And you can always say, no, Larry, you didn't quite get my question. As a little of a background, about now would be 3 weeks ago, we did a presentation to the Citizens Budget Committee where they had asked a number of times in previous meetings for the relevant data to be able to see trended data of how the operating expenditures were, and ongoing expenditures, how they were accounted for each period of time to see something that was comparable to previous years. And the data that we had in our budget book showed budget data. It might show some actual data, but it included one-time and capital costs, and no place was it real clear for them to see those costs pull out. And of course, those types of costs can cause distortions from one year to the next. So they asked us to present some revised numbers, and we took numbers out of the budget book and presented them. And you have a copy of all of this, and this is the top page of what we handed out to you. And I'm not going to read too well, but I'll point here, and you do have a copy in front of you. We revised the pages, and you notice I hand wrote on my copy at the bottom 226. That actually is page 226 from your budget book, and we revised it to include ongoing costs only, and that's in 3 categories, which are the personnel costs, the contractual services, and the commodities. And so these numbers for 2006, 7, and 8 represent the numbers that were included in the budget book adjusted to remove those one-time costs. Fiscal year 9, we showed actual, which again was those numbers, but in the budget book you'll see 2009 as a budgeted number. 2010 does reflect the budgeted number. When we presented this to the committee 3 weeks ago, they asked us to come back with them and give them some analysis of this schedule and give them this information on a monthly basis for all of fiscal year 2009 and going into fiscal year 2010. We told them that we had the quarterly data through December 31st available for that. And this schedule, which I apologize for the difficulty of reading, it is a schedule that shows all of the activity for actual expenditures for fiscal year 2008, 2009. Yeah. And I'm going to give you just a few explanations of what this data says and some overview summary from this data that you might find relevant.
Larry, before we continue, you know, there's a huge separation in this dais and everyone out there, but there's a huge space where you can sit, too. If you'd like to move up, it might be easier for you to see this and to hear. So everybody's welcome to move up, whether you're on the committee or not. Let's see if they want to. Some want to do that, so. Majority are pretty shy, however. Can you all see these charts back there? Can't see it here.
I can't see them from here, so they're not going to read the numbers.
And we can hardly see them from here, so we're all in the same.
We don't have copies of them, do we, that they can see?
We have a few copies in the back. Those that were on the committee received these copies last week, and they haven't changed at all, other than I will tell you that we reprinted out, so there might be different paginations, but the schedules themselves didn't change from what they were presented. And most of our discussion, we aren't going to get very deep into numbers in this discussion. But what is important to notice in this is that, first of all, we're showing it by department and division. We're showing each month for the 12-month period. Those are the next columns. And that gives us a total unaudited number through June 30th. We show some year-end adjustments in there for a revised total, and then we added the next year budget. That's a lot of data to get into a small area. But there's some things that you need to understand from an accounting perspective of this data to truly be able to analyze this data. One is that government generally keeps its accounting records on a cash basis throughout the year. But at the end of the year, we're on what's called a modified accrual basis. And for those of you in the business world, as it relates to accounts payable and those items, it's no different than the full accrual that you would use in a business account. When it gets to certain other accruals, it does get a little bit different. But what that means is that in July of any fiscal year that we're starting that year, many of the bills that we're paying actually relate to activity that took place in the previous fiscal year. And so those at the end of June 30th of that year, we charge those bills to the previous year if we had received it. That's what an accrual basis is. So if we order this pen and this pen comes in by June 30th, even though we pay for it in July or August, it would be reflected in June at the end of our fiscal year. So what that means is a lot of our commodity and those types of purchases end up showing in later months, very little showing in July. And we'll show you that, some examples in a couple of minutes. We also,
Larry, quick question. Does that mean then it's probably more appropriate to look at calendar year totals as opposed to monthly totals? Is that what you're trying to say?
what that means is if you're using this data as an analysis, you need to understand the data to be able to use it to answer your questions.
Okay, but what I'm getting at is the 12-month is would what you call equal that out over a period of time, so you wouldn't have the down in July and the sort of high up in June when you start charging some of that back. So if you're looking at month to month, sometimes there might be some variances in there, I guess is what I'm kind of getting at.
That is absolutely true.
Okay.
What are some of those variances? I mentioned the accounts payable. There also are variances of how many pay period, or how our personnel costs get charged in. And so I'm going to go through that with you for this chart. I'll point to the columns, and when we get to the one for 2009, 2010, I'll give you the same information for that year. For July of 2008, this chart included one pay period, which is 10 days or 2 weeks, that's our pay periods, plus 4 days towards another one. The reason for that is the timing of when pay periods happened, and at June 30th, we had to record all the payroll that people had earned, regardless of when we had paid it. So July is a very small month for payroll. August, you'll notice, is considerably larger for payroll. That is because we had 3 pay periods in the month of August. 3 biweekly pay periods hit that month. So in effect, 6 weeks of compensation rolled through that particular month. The same can be said for December of 2008. That had 3 pay periods in it, so those numbers got larger. And finally, in June of 2009, we had 2 payrolls and then an additional 7 days accrual to meet the end of the year adjustments. So those particular months, you'll see that the payroll numbers are higher than the other months. We also have time-to-time adjustments running through, and when you're seeing a credit in here, the primary cause of the credits that you see, and an example of a credit, excuse me for getting a little geeky on you, an example of a credit is in the mayor and council. You'll notice in September of 2008, there's a negative number for personnel. What happened is for accounting purposes and budget purposes, that year switched some staff out of the mayor and council budget, the support staff, and put it in the city manager's office. So but it didn't happen right away in the year. So you'll notice that number turned negative. If you go down to about the middle of the page where, no, excuse me, I'm in the wrong, I had it here.
City managers.
I'm sorry, 1320 in the city manager's office. You'll notice that one had $33,000 that month. That received the other side of that adjustment. I use that as an example because it's out on the front page. There are numerous examples of this throughout. Generally, those are moving an expenditure from one category to another that creates a change in one particular period.
Larry, quick question for you. At the top, I notice it says accrual expenditures, general fund operating. So this is, doesn't it say general fund operating?
It says annual expenditures, general fund.
So this is general fund, correct?
That is correct.
Okay.
This is only general fund.
Okay, so then, quick question. How are transfers, say for example, like the highway, where you take general fund money to cover some of the highways, or the general fund transfer to cover the debt service payment for the stadium, how is that going to show up in these schedules?
That data does not show up in these schedules. This data was put together at the request of the committee to give them analytical data of how the money is spent out of the general fund by those categories. It does not include debt service. It does not include transfers to other funds. It does not include anything other than these categories.
From my perspective, at some point, I think that would be helpful, because what I'm trying to get to some of this is, hypothetically, if you collect $60 million in general fund money, and with transfers and other expenditures at 65, then you're $5 million short. Your operating revenue does not match your operating ongoing expenses. So I don't want to jump too far ahead, but at some point it would be nice to see, how they line up, because we are spending money for the stadium, and it'd be nice, and it is general fund money, eventually gets transferred in just like for highways, so we could see where that balance may or may not, how far off we are from year to year. Does that kind of make some sense?
That does, and that is for many of our traditional budget schedules show that. But again, these schedules were created for a specific purpose.
Okay.
At the very end of these schedules, the last page, and again, for those of you that have the benefit of wearing glasses, now is a good time to use them. The very last page, you'll notice here we have percent of year expended. This is for fiscal year 2008, 2009, and so what we're showing there is how much was spent in the year, how much of the actual expenditures, this is actual comparisons, was spent in each of these months. Keep in mind what I said before, by spent, that is cash basis during the year and heavy at the end of the year. So very light, you'll notice it's 4% for the month of July. That's because most of our bills, our books for June 30th are often open until into August. And so that number is very low for the month of July. August, you'll notice, is about 11%. That's because, as I indicated earlier, it had some payrolls. But look over at June, and that is at 13%. The cause for that is that the bills that are coming in that normally would be paid in July, the way we pay our bills at the end of the year, we have to roll them back. And so that creates an increase in the cash outlays. And now we've made an adjustment back to the accrual basis. So that is what you would expect, whether 13% is the exact number. Plus, there's a little more than 2 payrolls in the month of June. But it obviously jumps out. Why is June the highest month? Are we burning cash quick? No, it's the accounting part that you're getting the conflict of the two different methods of accounting.
So Larry, the 100% at the end is reflected in each of the percentages in the shaded. So if you added up all the shaded percentages, it should come out to 100%.
That's correct. Okay. And in fact, the second line on there is cumulative total to the year. And that is, you'll notice it's 4% the first month. It adds the 11 the second to get to the 15th. And at the far right, and I hope that's not an accident, it comes out to 100%. So that is correct. Okay. Now the next line shows compared to the prior year, or excuse me, compared to the percentage of the year. That is simply a function of the calendar. Nothing else. Mm-hmm. One of the questions asked, and it becomes relevant to other questions, is, or one of the comments here is, if you'll notice through December, we were at about 52% of our actual expenditures in December of 2008 for that fiscal year. What I told the committee when we presented this, and this is my own very quick look at it, was that I was amazed at how even this was dispersed throughout the year. Probably a factor of the high percentage of our payroll that or that we have. The next schedule then that you have is for the current fiscal year 2009-2010. So we start, again, it's the same format, the departments and divisions, July of 2009, August of 2009, and so forth, carrying over through December of 2009 with a 6-month total. We're showing you a percentage of budget, or a budget here, and then a percentage of budget just as a frame of reference. In this, to get an example of what I was talking about in the accounts payable, it was on the first page in the previous version that I had, so apologize. On the second page of your copy, I like to use the city attorney's office. I used it before because it was on the first page, but it's a clear example. If you notice in the category of contractual services, and a lot of those costs in that particular case represent outside counsel, you'll notice that the month of July was $22. That, again, is the run-out. If you've used attorneys, they bill for the month of service, and generally you get that towards the end of the following month. And so you would expect that number for legal fees to be relatively low, and then in August you notice the number picks up and so forth. So that just shows kind of what the impacts of the accrual versus the cash is. Going to the last page on this schedule.
Sorry. I'm sorry, I just knocked her in the face. It's okay. Okay.
I know this is exciting stuff here.
I was teasing her. I said, oh, that must be 5 minutes worth of time for that $22. I was teasing her. Sorry. Okay.
At the end of this schedule, we gave you the percentages of where we were for each month. But this schedule, because the year is not completed, we can only compare this to the budget. And so you'll notice the first month was 5% of the budget. Last year it was 4% of the actual. And as you carry that schedule through the cumulative for the year, it shows we're at 45% of the budget. One of the questions asked that we are still researching, and we will get back to the committee on the March 24th meeting with an answer to is, I guess it was a question, or do I agree with the logic, which I do, but we have to research to see if the numbers and the data will fit the logic. Previous schedules, you recall, I pointed out that we were at 52% through December. Round numbers, let's just call that 50%. If you were to double 50%, you're at 100%. Here, we're at 45% through December. If we were to double that, in effect, you're at 90%. Take the $22 million that we've spent, comes out to $44 million. The logic is there. What we have to do and what we're researching is, are there any transactions that cause that to be a distortion one time or another? But it gets to be a complicated question, and that's why it takes a while. And my staff, got several staff working on it, and we're going to get that answered, yes or no. If there are, we're going to present that to the committee on the 24th. Generally, we look at data on budget reports monthly and where we are year to date on a departmental basis. Another thing that government does that's extremely unique in its budget monitoring is we encumber data. I'll give an example, but I honestly can't compare the 2 years, but I'll give it to you for this purpose and the importance of comparing it 2 years. Our audit fee for the 2009 audit, while the audit was completed, you received your copies of it in December. The fee for that wasn't paid until January. But we actually did a purchase order for that audit in July showing the full fee, which is approximately $45,000. So in our budget monitoring, we're showing that $45,000 is spent. Now, does that mean, therefore, that's not an issue? No, it doesn't, because I probably was the same circumstance a year ago. But I give that as the complexity of what we have to look at in these, as well as matching pay periods. It's a very good question, and we're going to be able to answer it, or whatever. We're going to go through it very much on that basis, and I think it's a great analytical tool to help us go through and look at it.
Larry, quick question.
Yes, sir.
When you do it, I think it would be helpful if hypothetically the 45 is 90. I'm just saying hypothetically. That 10%, which category makes up that 10%? Was it personnel savings? Was it contractual savings? Was it commodities? I mean, if you can get it in the categories you have there, I think it would be helpful.
Absolutely. I believe as we go through this, and it is my intent, that we will be able to go through this and say all of what the causes of it are. I'm not worried about that.
Okay.
To me, it's a simple reconciliation, almost a math problem, and that's how we're approaching it.
Well, the only reason why I ask is I know there's been an effort when somebody leaves to lock that position down, freeze it, and so I suspect if there's going to be, and I'm just guessing, that you're going to have some savings probably in those personnel areas. I'm guessing, but we'll find out when you do the analysis.
That's correct. And those are fair issues. I mentioned the audit. Last year we had an election. This year we didn't. How does that come into play? Mm-hmm. By itself, it's not a big deal. It doesn't move these percentages much. But we'll see.
Okay.
And that's exactly the type of analysis that is and will take place. As I said, that isn't completed at this point in time, and I think it's an excellent tool to help us as we're going through, and we will be doing that. So with that, the other thing that we passed out to you this evening and also to the Budget Committee, and I think you've already received a copy of this, and that is the quarterly report, and this is through the second quarter of fiscal year 2010. And some of the questions that came up, I'm going to go through this. I'm not going to go through it very slowly. I'll give you an opportunity to read it. Obviously, you are really the target audience of this report, regardless. And you've had copies of this in the past, but I don't know that we've ever spent much time going through it with you. And so I'm going to just briefly show you what we have in here. if you look in the general fund here on page 2, at least on my copy, this one has a page number. So we're showing the general fund revenues. We're showing the second quarter budget. That is 2 quarters. That isn't just the second quarter. That implies with the terminology that that's just the second quarter, but that's cumulative quarters 1 and 2. Second quarter actual for those revenues, where we are and what the variance is. The next schedule shows 7 key revenues that we track. And you'll notice in there we have property tax and sales tax, and we're showing as a percentage and where we are in those key items. The permit plan review fee, that was definitely before we received the West Corps money, but that shows how we're trending a little bit, but the $3 million is half of the total budget. So this isn't adjusted for any type of thing like that. This is total budget comparison.
So your general funds are on track so far through
At
2
this
quarters?
point, and this is through December. And we're still holding on track. Construction sales tax, the latest data we received is, we're kind of holding on track at a lower number than we'd like to see, and we're really watching that one close. The development-related revenues, we're concerned about those, and we're watching a lot of these very closely, obviously. I'm going to skip to...
Larry, before you do that, would you elaborate in some detail on this package? On the second page, you've got the second quarter general funds are at 47% of the total fiscal year budget of $60,073,000. And in these series of charts, you have the budget is $50,034,000. So can you elaborate on the differences there?
The key revenues make up a portion if
No,
that
it's the budget itself, not the revenues.
I guess I'm not following you, Mayor.
On this, okay, right here, at the top, on this thing.
Yes, general fund revenues
Yeah,
there.
yep, is the fiscal year budget of $60 million.
Yes.
Okay, and then we have here, on these charts, and it's $50 million is the budget. So,
Okay.
just,
This number is our expected revenues citywide, includes construction, sales tax, and everything. The $50 million that's budgeted, that's the total on this schedule, is the actual budgeted operating expenditures in just these 3 categories for the general fund. That is not all of the general fund costs.
which, yeah, that's what I'm asking. What are we excluding here?
We are excluding one-time costs
Such as?
I'm trying to think in the one-time.
Equipment? Equipment?
It could be equipment. We don't have a lot in the budget. Capital costs of capital improvement plans, those types of costs. It also is excluding, as indicated earlier, debt service, which is not in there. It's excluding the sales tax reimbursement. And the reason we excluded that is because it just kind of didn't fit with any of these. It was in one department one year and another in the other. It excludes the transfers to the other funds, which is consisting of transfer to the streets fund, which is done annually to supplement that HERF money, as well as the transfers to the ballpark for both operating and debt service. It includes I think off the top of my head, that's most of them, but it's all of the expenditures that build the budget. These schedules are only those operating, and the purpose of that is to show from year to year, month to month, what the trends of our cost to operate are. Okay? That was what was asked for.
Okay, it would seem to me that the differential is largely in carrying costs. Is that a valid statement?
No, I wouldn't agree
interest
with
costs.
that. There are interest costs as part of it, fairly large number. You've got your debt service, for example, on the ballpark, approximately, I'm going top of my head here, but I want to say about $5.3 million that it comes from the general fund. You've got about $900,000 off the top of my head on some PIC bonds that were issued to finance, I think, a fire station and the interim office building, refinanced as part of the ballpark deal. So those total about $6.2 million off the top of my head. That is part of that. So that's, if it's significant or not, is it's what it is.
Okay, and just make sure I have it. The CIP is, how much is our CIP?
General fund portion for this year.
Exclude water,
Yeah.
enterprise.
Actually, I'm only going to use general fund and no impact fees, no bond money. That number would be somewhere from the general fund in the range $4 or $5 million. It really dropped down in the last couple of years as our budgets have tightened up, and most of that is contractual obligations.
I didn't ask it right. When I talk CIP, I'm really talking about long-term financial requirements, bonding, and that isn't $4 million. So
Oh no, that's considerably.
So tell me what
larger.
that is. What do we have outstanding in our long-term obligations?
I'd have to look the numbers up. The total, I really would have to look up. The annual debt service on those, just for the general obligation bonds that we're not planning on utilities picking up any portion of out of that secondary property tax, I believe that number is about $4.5 million, and that comes out of the secondary property tax. Doesn't come out of the general fund.
So it's the PIC bonds that you're referring to?
The PIC bonds that were used to finance the ballpark come out of the general fund. That's correct.
Okay, and the GO bonds come out of the?
Debt service fund, which is the secondary property tax, is legally restricted only for that purpose.
Okay, now, why are the baseball bonds coming out of general funds, whereas the other CIP are not? I'm talking about the carrying costs.
The carrying costs of the PIC bonds,
Which is like the interim office building was the PIC bond.
yes, those were financed that way because that was how the transaction was structured. We did not have the GO capacity to do that. There was a very specific voter authorization for $10 million of PIC bonds, or excuse me, GO bonds, apologize. Those were issued out of the GO bonds and are funded out of that secondary property tax, and that's a different amount of money.
And the bonds for the stadium are funded out of the general fund because?
There are not sufficient revenues from the ballpark directly to pay for them.
And those were GO bonds, were they not, or am I wrong?
No, they were not.
They were what?
They were PIC bonds, which are excise tax bonds. They're actually, the security on those are general fund revenues.
But the 10 million was a GO bond, wasn't
That
it?
is correct.
So some of the stadium costs are carrying costs are coming out of the general fund and some aren't.
That is correct.
Can you tell me which are and which aren't?
5.3, I'm going off the top of my head, so
I know.
give me a little cushion on that.
No, 5.3, I've heard that one. That's out of the general fund. What's coming out of the?
The secondary property tax, I think, is about $850,000 against the $10 million. That's coming out of the secondary property tax, which is what we call a debt service fund in our accounting records. And then the additional is I use the term subsidy of the ballpark, which is, in this year's budget, is about $2.4 million. With adjustments that they've made, they're hoping to be able to reduce that number a bit down to, I think it's 2.1. If you'll forgive off the top of my head, give me a little margin of error, but
No, I do.
that's generally.
Larry, wasn't part of the issue capacity? You had $10 million capacity bond authorization, so you did the $10 million for the GO for the ballpark, and then the other part, which was what, 106, 108, somewhere in that vicinity, had to be PIC bonds because that's the only way you could afford to pay for it.
That was the only revenue source available.
Yes.
There has been a proposal coming from a member of the Citizens Budget Committee to look at refinancing that. That'll be looked at in the long term as a proposal from them involving legal as well, bond counsel, obviously, as well as that recommendation. If that comes as a committee recommendation moving forward, it has some ramifications that you would want to weigh in on before we did too much research on that.
It's a good time to weigh in on those, though. That's an interesting idea. Basically, the suggestion is saying let's move this into secondary property tax for repayment, a portion of it. The $10 million, as I recall, was approved by the citizens, and that's why it was a GO bond.
Right.
I don't think capacity was an issue, but it may have been. But whatever the number is remaining, and I think it's somewhat less than $100 million, but I may be wrong.
No,
It was. I thought the
total
whole
PIC
package
bonds-
was 108 or 105.
For both, we did for the original ballpark, for the Indians
Yeah.
facility, that one, as I recall, was, for round numbers, was about 75 million,
And the other was 30,
and the other was 34 that included a couple of
which
the
came down to
lights and that.
31, didn't it?
The actual did, but we actually borrowed the higher amount. You have to do it in
No,
advance.
I understand. Okay, so tell us the pros and cons about refinancing that. Is it legal?
Well, that's the first part. I've had preliminary conversation with bond counsel, but until you have an opportunity to weigh in on it,
But
I don't think
Let us tell us so we can weigh in now.
Yeah,
On a
I'm going to. What
work
I'm
session
saying is, I don't think the legal issues are as important until you have an opportunity. What would happen is that, and I'm not going to outline exactly that proposal because I don't have it in front of me and it's coming from a committee member, but that proposal basically would say if we had outstanding capacity in the recreation category, which we have about $40 million worth,
In capacity.
40 million of approved voter authorization for those types of, or for recreation or park facilities.
So this is in the 20% category, right? Versus 6 parks.
I think it's in the
Yes.
20%.
It's 20%.
Okay, so there's quite a bit of capacity there. I mean, not a lot.
The
but-
20% capacity is one issue. The other is the combined property tax rate of $1.60.
Right. Now, okay, go ahead, again on the, keep going.
Okay. I haven't done the calculations. I think in there was an estimate by the committee, but I haven't done any calculations. We really haven't worked this that hard, but let's accept what I remember from the committee for purposes of this discussion. That if you were to transfer over a portion of that debt, don't remember the portion that was advocated, that would increase, and you increase the property tax rate to do that, that would increase the combined rate from $1.60 to $1.82, if I remember right. So that's one policy question. Obviously, we would do some analysis on it, either before you had a lengthy discussion to do the calculations, or if you want to discuss it now, we can bring you back more calculations and research to the extent of your interest.
I think the first question, Larry, and just to piggyback with what the mayor's talking about, is can you legally, refinance it under the parks? I mean, would it qualify for the park authorization? I think that's what I
I'm going to give
think.
a simple answer that says yes, and I will tell you that that simple answer has more caveats than I
sure
can,
it does.
which include the Arizona law regarding refunding bonds.
Yeah. Okay. And I think that's, I could be wrong, I think that's what the mayor's getting at is that capacity, if you can do that with the stadium for parks, is it legal? It would be the question, I'm guessing.
As bond counsel and I have generally discussed it, we think that it's conceptually possible to do, but very difficult, and we would want to spend some time on it.
Now, back to the $1.60. Right now, we use half of it for primary and half of it for secondary, correct?
No, it's a different
The
formula.
ratios aren't there. The primary is set at the limit allowed, and so this year, mean,
It's usually
look
about
at the number here.
it's usually about $1, isn't it, Larry?
This year, it's about 5.6 million is going to primary, 9.3, I believe, is going to the secondary.
So break that into buck 60 numbers.
I want to say
Sounds like 90.
910, it's like 60-some cents for the primary and $1 for round numbers. I think it's just below $1, but for the secondary.
And that's for this fiscal year.
That's
No,
for
I knew it wasn't.
fiscal year 910. Those numbers change dramatically as our assessed valuation drops.
Are we,
We'll be showing you that in a couple of weeks.
But and as I recall, recently, I won't even say that because I'm not sure, can we modify that relationship? Can we increase the secondary vis-a-vis the primary?
The city council has that ability to do it. I would, and we will, you're going to see a presentation in a couple weeks that'll address this. It would
Excuse me, I have a
not be
question.
my recommendation to do it, but you do have that discretion.
You mean within the current rate,
$1.60.
$1.60, without raising the taxes, that's what you're saying?
Yeah. In other words, move more of it to paying carrying costs,
yeah,
secondary.
I guess
Correct?
I'd have to
That's
see what
what
the
I'm asking.
ramifications of that
So
would
we
be.
And it
don't
would
have to go-
reduce the appropriation to the general fund. That's correct.
Okay, I agree. You could go to $1.80, or you could reduce the proportion within the $1.60.
Correct.
Okay, that's important to know.
and currently, right now, if I'm not mistaken, Larry, your policy is to maximize the primary, because if you don't, doesn't that limit what you get the following year as far as the growth?
It can.
Okay,
It can limit it.
I think we
as
lost-
it did a couple years
yeah,
ago.
okay.
And how does that work?
What happened is, when we lowered our rate from $2.10 to $1.60, instead of levying the maximum in the primary, that's where most of the lowering was done. After we did that, the voters approved something that said, whatever you levied in 2005 is your new limit. And the argument that the Arizona Tax Research Association gave very simply was, well, obviously they don't need it. Well, we were in a transition period. The impacts of that are about $1.5 million a year today, but that is what it is. It's gone. But that's one of the reasons that I recommend I really don't like to see that transition, because at that point in time, that's gone forever, if that happens again.
But it's an option.
Yeah, and it is discussed in a couple of weeks in the presentation you'll be getting, I believe. Okay. Okay. I wanted to show you just a couple of other schedules on this. One is in about page 7 here. Apologize, this is hard to read, and this is a heck of a lot of data on here. But this is in this report that you get, and it shows a little broader in what those revenue sources are, what the collections are, or what the budget is, the July through December actuals compared to the prior year, and fiscal year 2010, the budget column being adjusted as a revised estimate, and then if that's adjusted, what that difference is. The next group is the expenditures. I'm going to tell you on this that because of the timing of this other presentation, these two schedules were coming from different times, and I just didn't bother tying one schedule out to the other, but this is intended to give you where we are in the budget at that point in time. And with that, that is also reviewed with each of the departments of where they are within their budget. With that, I think, if I remember right, that's most of the discussion that we had the other night. Actually, some of the later discussion we've had is a lot more than what we had the other night. I know there was a lot of committee discussion, but the council wanted to see kind of what we talked about and the same information.
Okay, so it's open again for us.
Absolutely.
Okay, I'd like to comment or
Go ahead, Jeff.
No, I'd like to follow up what the mayor was talking about. I think a discussion on some of the options, because seeing some of the preliminaries on some of that debt service, I know TSA has rescheduled some of their payments that we're supposedly getting over the period of time for the ballpark, and their forecast is my understanding, it's not quite as rosy as it was originally. So maybe possibly a discussion, follow up on possibly alternative ways of refinancing some of that debt to try to get, some of that stranglehold on the general fund reduced. So again, I think it would be a worthwhile discussion for the entire council to see what options are out there to get that down. Because again, if I'm wrong, my understanding is in 18, 19, and 20, and I guess Brian would know more specifically about that, is we're going to see some spikes as a result of some reduced potentially estimated revenue from the TSA and the other funding sources we have, because they're getting hit as bad as everybody else who out there. So it'd be nice to kind of jump ahead of that curve and look at some of our options, I think, to mitigate some of the general fund money that's needed, to pay the debt service. So I think it'd be a worthwhile endeavor and discussion.
Yeah, my concerns are for the future, and that is, I know several years ago, I questioned the fact that we were budgeting based on what we were taking in on construction tax. And without construction tax, the budget didn't work. It never did work, and it still isn't working today. And we're having a difficult time with that. We need to start looking at budget excluding, or at least not counting on, construction tax. Now, I know that's a big item in the budget, but we can't count on that, and especially now, and we don't know when this will stop in the next few years to come. I don't see construction picking up, and we need to build our budget based on something other than part of it, at least on construction tax. So I'd like for the city to look at this in another way, and that is to think in terms of setting up a budget that does not include, or at least that small percentage of budget of construction sales tax.
I think the current one does.
It does.
Yeah,
Yeah.
We have reduced the construction sales tax from a peak of about 25 million for, I'm going to say 2007. I don't remember exactly when. This year's budget is reflected at 6.2 million. That's the 9-10 budget. Next year, we've already reduced it a little bit, and we're having discussions to say if we want to reduce it a little further. We also have been trying very hard to keep those costs, or the construction sales tax, only going to one-time type costs and not to ongoing.
So there's no dependency.
Exactly.
Yeah, but the point is, we keep worrying about construction sales tax, and that's all I hear. This is down, so I don't know how we're going to do. Well, we can't count on this.
That's correct. And when I'm saying, like right now, for example, construction sales tax, when I'm saying I'm concerned about it really as it relates to next year. This year, for example, we're tracking right now at 5% below, if I remember right, which would be $300,000 below the estimate in the budget. The number, talk about a volatile number, that number changes constantly. It's, so it's just a number we're watching closely.
Okay.
That's all.
Larry, I'm curious. Tell me, in the corporate world, the bookkeeping system, is it similar to this, or is this diverse from what most people are used to seeing calculations of budgets?
It's going to vary. First of all, in a budget environment, it varies considerably. In a corporate world, it will always vary.
And why is that?
Each business runs under a different plan as to how they build a budget and how they use a budget.
Do they have more freedom?
Generally, based on their policies, we have statutory restrictions
Right, so-
that we
so the
cannot
state
go
prevents
over
us.
our budget,
Okay.
regardless.
Right.
Okay.
And do we
But
have?
the other part is a management part.
Yeah, and do we have, in city budgets where maybe in a privately owned budget, you're able to transfer money from one area to another area, where sometimes within the government that's statutory, you can't do that. Things are pretty more finite. Is that?
Clearly, we are subject to more regulation than in the private sector, but that's not 100% true, and I think it depends on the size of the organization and the nature of how that organization is
Well, it'd have to be a
operated.
pretty big company to compare it to the city. I mean, it couldn't be just a small, right?
Yeah, that's kind of the point. If you're talking a company that grosses $200,000 a year, the whole accounting system is a lot different
Yeah.
than one that grosses $2 billion a year.
Yeah.
Completely different
And
systems.
then I have a question for the lawyer. Can I say anything about the Budget Commission, or is that off? I can't mention anything. Is this just, I mean, this was requested from the Budget Committee, right?
Yeah, but if you're looking at your agenda, that's probably getting a little...
I'm sorry, you're going to speak. I can't talk and I can't hear.
So if you look at our agenda, you probably want to limit your discussion to the agenda item, which is the budget documents and comprehensive
Oh,
action.
okay. All right, thank you.
Councilmember Loretano, would you have any comments or questions?
Right now, I'm taking it all in, and I probably will have questions as this goes forward,
Okay.
so I appreciate it.
Not at this time.
Dick?
I'm just concerned about the losses of sales tax and construction tax, sales tax. How we're going to make up that difference. We're going to keep losing those funds from those two areas. And I know it's a big problem. But the only way you can fill that gap is by taxes. And people don't want to hear the word raise taxes, so we find ourselves in a hole that we're going to try to dig ourselves out of. And I appreciate, the efforts of the committee in making recommendations to the council. The items that are put forth here this evening that we're discussing, I think, afford us a lot of thought. Thank you, Mr. Chairman.
Thank you. I got several things I'd like to cover, Larry. Let me just look at something. Mr. Massey, can Vice Mayor Lord comment about the committee in current events?
Not knowing what Vice Mayor Lord's comments are, I would caution, you might make some comments on it, but
I would say the comment that some of my feelings are feelings of concern, so maybe it wouldn't be proper at that point. I'll just have to find out from you when I can make that known, because I would like to talk in front of the entire group about it, because I am very disturbed about something.
thank you.
Welcome.
Okay, let's go over this, some of the history on this $1.60, because that's been discussed over the last several weeks. It goes back to those who weren't here. It goes back to, I don't know, 2005 or something like that, in which the city of Goodyear had a property tax rate of $2.10. It was the second highest property tax rate in the valley. The only one higher was Tolleson. I think, as I recall, they were $2.30. And Tolleson, of course, has a lot of warehouses and that sort of thing. So that's one of the ways that they garnered their revenue. But $2.10 just seemed to me to be too high for our citizens. Now realize this is one tax that you don't share with the person from Buckeye or the person from Albuquerque or the person from New York. This is one you pay if you own property in Goodyear. So it's entirely paid by Goodyear. So it seemed like if there was some way we could reduce that, it made sense to our people. So we had meetings, probably 20 of us or so. It was a committee, and I think I chaired that committee. And I was pretty strong on reducing that tax. Well, we were able to reduce it from $2.10 to $1.60. And since that time, and I don't know if it's 4 or 5 years, but I think it's 4, that it wasn't necessarily correlated, but at the same time we reduced that tax, we increased the construction sales tax. And we went from 2 cents to 3.5, or 2% to 3.5%. The result for the city of Goodyear over the next 4 years, and I'm pretty close on this, is that the city of Goodyear, understanding the loss of revenue through real property tax, correlated to the gain in revenue through the construction sales tax, amounted to $17 million additional revenue. So it was sort of in fact, even since the recession, we still are ahead in that particular decision. So the problem with that is we have to find a way, and there's various ways of doing this, to fund long-term requirements. And we need to be creative in doing that. But that's why we did the $1.60, and it certainly saved our residents several $100s, depending on your house, several $100s a year for 5 or 6 years now. And those who paid that were those who were developing Goodyear and bringing it along and making it a larger city. So development paid for what development cost. On these charts here, it shows that we've spent about 45%. And theoretically, if everything were perfect, and I understand accruals, and I don't know what this June will be as far as pay, but it looks like December was similar to the previous December. So there may be a spike in June, but 45 versus 50% is not much. But the difference is 22 million versus 50. And if we could keep our expenses in that 22 to 24 range, then that's going to give us approximately $4 million at the end of the fiscal year in O&M, day-to-day recurring expenses. And I think I would urge council to urge the city manager to in fact try and do that, to keep these expenses at their lower level. And let us see if we can come in at recurring O&M of 46 versus 50, and therefore have $4 million additional. I am, when I look at the breakout by department, there's some departments which are, I'm not talking fire and police, we all know their importance in public works, but there's some that we don't often think of as significant. And, well, I shouldn't say that. We know they're all significant, but we don't give them the credit they're due. IT is the backbone of the city. I mean, if IT doesn't operate well, the city becomes very ineffective. Community development is absolutely crucial, and economic development is very important to us too. And I noticed that in those divisions or departments, the department of the city manager and HR have a larger budget than those, significantly larger than economic development, a half again as large as I recall, community development, and approximately the same, maybe a little less than IT. It seems to me that the departments which are crucial to our success are budgeted at a number equal to, or in most cases less, than those departments which are strictly administrative and managerial. And I think that's worth investigating to see how and I guess HR includes insurance. But it seems like we really need to try to cut into those strictly administrative type departments better than we have in the past. So if we could do that, and I don't know, is there any objection to that in this council?
I'm not ready to make any recommendation on that.
No, I'm not either.
I wish you were.
I just received these numbers.
Yeah, I have too. I just received them. I don't know if, I see you're highlighted. I don't know if you got yours before or what, but I haven't had any time to look at them.
Well, okay, then maybe next week we can, on the 22nd, we can discuss
Mayor,
it.
if I could, on very specifically on the 50 million, the 44 million, as I indicated at the time, we're doing some analysis and going to be reporting back to the Citizens Budget Committee on that on the 24th. Included in there at the time of that discussion, and as you'll recall, we have already reduced this year's budget by $2 million. That is part of that number. The rest of the number, I really want to see what the makeup is, and I think you do too. You want to see what the makeup of it is. There may or may not be some policy questions in there. As I said, I think it is a very good tool for us to use, and we're having to have staff work up all of the analysis necessary. I've told them also in no uncertain terms that I don't want them worrying about a ream of paper that was bought in August of one year and February of the other. That's not what we're talking about. We need to be talking the large dollar transactions.
And I think, Larry, that your presentation was pretty doggone genuine and honest, so I appreciate that, okay? I'd like to follow on Joe's comment, and that referred to the baseball and the fact that the SDA is actually moved, at least unofficially has moved us back a few years. And where we end up is going to be a function of two things. One, what happens to the Cubs in Mesa, and how are we going to work through that problem? And we can't allow ourselves to be left out, nor can we allow them to circumvent contracts that this government, whether it's the STA as an agency or whatever, has with Goodyear. We can't let those contracts be usurped, nor our position be circumvented. So that's one thing that's important to us. And of course, the other thing is what's going to happen to the economy. If it recovers greatly, then we probably would move back into an earlier position. But so those are certainly subjective or based, really supposition based, and so we don't know yet. But we do need, when we talk about the universities and city center, we need to, and I've asked that those be integrated, and I think we're starting to do that. We also need to integrate this baseball idea of refinancing. And we need to integrate these other things like interoperability of radio systems with the police and the city telephone service. And there's a few others that you wanted to do. We need to discuss all those and look at each of those and see what's the smartest way for the city to go now. Okay, so on the 22nd, we need to make giant strides forward in looking at that stuff. And we need to be creative. And the last thing is, for me, is what do we have in rainy day right now?
The contingency fund is at $16.9 million as adopted in the budget.
What about this? We were at 24.
The $4 million difference that we talked about in the audit has not been spent. That is still there. It is just not allocated anyway. That will that will come to the City Council for allocation, probably as part of the 10-11 budget process, with recommendations and so forth. But it is still there.
So, is it? If we put $3 million into the rainy day, and as I recall, rainy day ended, thought we were going to 24. There was a $7 million differential.
No, there's only $4 million.
Okay, we certainly questioned that, and I'd probably want to talk to you about that so you can explain to me why it isn't 7. If rainy day, therefore, is 16.9 plus 4, likely, is that correct?
Correct.
Okay, not plus 7.
Correct.
Then, and I'd like to talk some other time about that if we could, just so I understand that.
So let me ask a question here. The figure is $20 million in the rainy day fund. Is that right?
No. In the budget we adopted for 9-10, we dropped it down to $16.9 million, which is consistent with the overall requirements in the charter.
Okay.
The year before, it was at $20 million.
All right, now, explain how this $4 million comes into play, then, that you're talking about right now.
The $4 million, that after certain carryovers in that, at the end of the year, we should have had $20 million in the bank, because that was last year's budgeted number, $20 million. That's what we contemplated moving into this budget year. We had $24 million. That's the $4 million the mayor's asking about.
But that's not a part of the rainy day fund.
At this point in time, it is not
But it can be
allocated.
moved
The
into
only
the
way
rainy.
that money gets allocated is by your allocation. It is not, has not been spent, will not be spent. It'll be brought back to you for allocation. Generally, in the budget process, we do that, the following year budget process.
And you'll be able to tell us where that originated, where that came from, how that happened? Well, we didn't know it was there.
As we showed in some schedules, and I think we're getting quite off these schedules, but as we showed a couple months ago, that number is actually a lot closer than what the estimates have been in the past. And those numbers, yeah, I've got a schedule that shows from our original budget then to our modified adjustments, and it's a very complex schedule. As you recall, we had revenues plummeting that year. At the same time, we were cutting back expenditures. We had a lot of balls in the air at that point in time. So we just had a pretty close estimate. But absolutely, that was done within the audit. You know, that was our actual financials.
Couple things, follow up what the mayor was mentioning on IT. I think it would be helpful because I do agree that for us to be more efficient and effective long-term requires strong IT, strong technology. If used right, that's going to make us more efficient and effective long-term. So I would like to even see some presentations on where we're going in that area. Second thing, when it comes to the property tax, I understand why we went from $2.10 to $1.60, but I'd like to have the discussion on locking a rate, and here's the reason why. The rate is a mathematical calculation. Rate times levy, rate times assessed valuation equals levy. The problem is when you focus in on a rate, as long as assessed valuations are going up, that gives you more money. But you're using that money to pay debt service. When assessed valuations go down, you don't have enough money to pay debt service. I'd rather have just a broad discussion among members of the dais here on whether we should focus on any growth and meeting certain long-term requirements of our capital needs as opposed to focusing on a mathematical calculation. I'm not suggesting that we raise rates, don't get me wrong. What I'm suggesting is a policy that doesn't have these fluctuations, because right now as things are going down, you may not have enough money to pay your debt service. So, again, to follow up on some of the refinancing for the stadium, I think it's just worth the discussion to see if we want to explore any of those possible options.
Yeah, I would want to, Joe. And, you know, if we can cut the cost of doing business, then it gives us more options. You could possibly, if you had to, you could raise the tax as long as you lowered another one. And it just has to be fair to our people, to me. And I'm not, you talked about it was just a $4 million change or projection error or whatever. We raised the taxes $4 million, Larry. So that's why that $4 million additional rainy day bothered us. It's our responsibility to our folks that we're worried about. So, and any time you do something with taxes, you're affecting that responsibility.
Larry, I have a question. This is the first time I'm rather new to this that I'm looking at some of these charts, and I understand it's very easy for me to get my hands around, you know, personnel services, benefits along those, and what you said with commodities. Is there any way we can get a breakdown more of what's listed under contractual services? Because some of those seem awful high in compared to the budget, and I just don't know what's all included in there. So it seems a rather broad category.
Those two, commodities and contractual services, are extremely broad categories. We have I think it's a 13-digit account number. The last four account numbers determine what goes in there. And account numbers from 2,000 to 5,999, if I'm not mistaken, are the ones that go into that category that you're asking about, the contractual services. It's very broad. We could definitely get you a list of it. I had someone in my department suggest we get you and the committee a list of our chart of accounts. I wouldn't really do that to you because it's really complex to follow. There are a lot of things in there, and we're happy to get you a list of what's in there, but it's those broad categories are not what they sound like from my point of view as far as descriptors when you put the actual accounts in there. Contractual services sounds like something where we're just hiring outside it could very well include postage in there. I'm not sure, but we can get you that list.
Oh, I appreciate that.
Okay, and thank you to the committee and Mr. Broadbeck for suggesting this. I think it has been enlightening, very enlightening, in fact. And I think it's a great lead into getting serious about budget preparation this year. So, and seeing how we can possibly cut the cost of governing so we can do other things for the long-term benefit of the city. Any current events that people wish to speak to? Okay, city manager? Okay,